Alrighty, good morning, traders. This is Blake Morrow. I just realized that I was running a minute late. Did not know that until just now. So let me go ahead and throw that, throw the webinar thing into the chat. Okay, so we had this beat, inflation beat, and whoops, that's not where I wanted to be. Here's your data flash, so you can see that the CPI data came out, stronger than expected, and the dollar actually slumped on that news. Matter of fact, Steve or Stelios, are you guys here real quick?
I'm here.
Hey, is Steve here too?
Not yet, I don't think. I don't see him, no.
Okay. So why after we had this big inflation beat, why did the stock market come, or why did the dollar go down following that news?
That's a good question. I don't know, actually.
Yeah,
Do you know?
I don't know. I mean, I'm sitting here going, why is the dollar actually slumping? And then, obviously yields came down too. Bonds rallied, yields came down, and I don't understand why. Like,
I don't get it either.
What did I miss, guys? Sorry, I lost the first 2 minutes. What was the question?
Hey, Steve. Hey, I was going to ask. We had the stronger inflation data come out, and then and by the way, the conversation from earlier is like, is just pointing out like I don't know what I actually think inflation is going to go higher too, but the whole world does, and we've been proved wrong before. Over the last couple of years, and I mean, but inflation went up, the dollar actually came down. Why do you think that happened? Because I don't know. Neither does Stelios.
The question is why the market still doesn't seem to understand reality, and in many cases the opposite happens, because the illogical is the opposite. Inflation is eroding the purchasing power of a currency. So the normal response to higher inflation is a drop in that currency. So that is the normal type of movement. Now, why do we
not necessarily, mate?
Why do we frequently see the opposite?
Inflation brings a reaction from the central
exactly.
bank.
Why do we frequently see the opposite? Because the markets want to discount future developments. So usually in the past, we had the perception, and that's how central banks functioned, that an increase in inflation should be met by increasing rates to tame that inflation. Now, Powell has made it extremely clear that the preemptive type of policy that central banks have had since the 70s and the big inflation boom that we had back then is no longer the case, because he has said that they believe that this is transitory, and they're going to treat it as such. And if we end up having high inflation, they're going to deal with it after the fact.
Yeah, they're definitely not going to be preemptive. We understand that.
Exactly. So, I mean, taking that into account, I think the normal thing to happen is for inflation to be pushing the dollar lower until or unless the Fed proves that it actually wants to do something about it.
Yeah.
And I think that sooner rather than later, precious metals are going to wake up to that reality as well and begin their next leg higher.
Well, they're definitely moving higher this morning. All right. Well, thanks, Steve, for the explanation, and thanks, Del, for chiming in. I'm gonna get through the charts here because obviously we didn't have a whole lot of movement earlier, and now the euro's kind of pushing back up towards channel resistance. Anyway, let's go ahead and we're gonna get started on this analysis because I know. The thing about doing these timed webinars is everybody's scheduling their time around these webinars. So I want to make sure I stick to some sort of schedule here. So thanks again for you guys' feedback. And then I'm going to pass it over to you in probably about 15, 20 minutes. The euro dollar, as we noted yesterday, we had this little minor channel, and now we're heading into channel resistance. And I actually think that the 50% retracement or this previous support are going to come into play. This is the same resistance zone we had drawn out yesterday. So anywhere between 1950 and 1990 is going to offer us some resistance. So I am going to write down this range. So 1950, 1990. And I still feel that we're bearish, and we got to stay bearish while we're below the 120 level, in my opinion. And we'll also have to take into account stocks have really done some wonders today, or wonders recently moving higher, and it's failed to drag the euro very far. So that's just something to consider. One of the reasons why the euro is a little stronger today also is that the euro sterling is above 87 pence, as the cable got smoked today. And Stelios, you were saying that
Andy Haldane was the most hawkish member of the Bank of England.
Yeah, so I guess you lose the most hawkish member of the BOE, and the cable comes under a little bit of pressure, right? So
yeah. And you don't have many hawks in the Bank of England. That's the thing.
You don't have many hawks in any central bank for the
right. That's true. All right, but let's say that you got the cable, the euro sterling's feeling a little bit of upside pressure. That's keeping some upside pressure on the euro just as a whole. Speaking of, I guess we should probably go back here. So that means support. You can see this trend line support is going to be pretty key, which means that spike low right here at 118. Let's just call it 118.60 is going to be key. Okay. Intraday. Sterling. So we were bouncing, and a lot of people I think are trying to play this double bottom. I'm not so convinced of that. I think that these lows down here are just creating more stops below support. So anything breaking below 136.60 is going to be really quite bearish. But I'm gonna just write down those numbers, and you can't ignore the lows there. You just can't. But you can see this 38% retracement is capping. Maybe we get up to the 50% retracement, but like the euro, the sterling's now starting to struggle too. I have to say it's, what if equities start to turn lower? If equities start to turn lower, does the dollar catch a bid and push the sterling and euro down? So 50% retracement comes in at 138, but we're even struggling here at 137.75. I'm going to write down 138 just to be on the safe side. I'm going to keep us in range unless we break through this support. This has now become critical support. Aussie dollar. So the Aussie isn't doing anything. I had sold some yesterday in the 30s, bought it back earlier today near 76, sold some this morning, but it's a little firmer at the moment, which is irritating me. But we are still just in this, channel. Matter of fact, I should probably cancel some of that. But anyway, resistance is going to be up here around the 76, 75 level. We still have to note that even though channel resistance really comes in at 76, let's call it 40. So I'm going to write down both those numbers. 76.40, 76.75. It's right there. I mean, support is going to be 75.65. I've had something in my eye since last night before I went to bed. I drove my son to practice, and he wanted to roll the windows down because it's nice here in the evenings, even though it's warm during the day. It's desert. So, in the desert, it cools off quite a bit. So we had the windows down, and something flew in my eye, and I couldn't get it out last night. I don't even know what it is. And then it's still in my eye. So now I'm going to go do some eye surgery on myself as soon as I'm done here. Do you guys ever, use tweezers and pull things out of your eyes?
No, please God, no.
Oh God, it feels awesome. It's awesome.
I wouldn't recommend it.
Oh no, it's wonderful. It's actually it's tough when you scrape the edge of your tweezer up against your eyeball. It hurts a little bit, but I've done it. I've actually pinched it before. I bet some of you guys are like wincing in
Good
your
luck with
chairs right now. I've never done that, just for the record. I'm totally making that up. I was just trying to make you guys a little wheezy. No, I hate having something in my eye. It's driving me bananas because I can't even wear, fortunately I haven't had eye issues other than, when you're over the age of 40 and you become you lose your
Short-sighted. You
I'm
become,
sorry?
you, how's it called? Long-sighted, whatever. Yeah.
Far nearsighted and
Yeah, and far-sighted. Yeah, whatever.
far
Yeah,
whatever.
You lose the ability to see clearly close.
Yes, correct. As you get older, as your lens kind of, anyway, so I have to wear readers. I start wearing readers probably in my mid 40s, somewhere around there. But anyway, I've never had other issues. So with my eyes, thank goodness, because I watch people put
Contact lenses.
contact lenses in. Oh, I can't. I get like I get the chills looking at that. So
No,
I
it's
would be a wussy.
it's until you do it a couple of times, then it's nothing really.
Yeah, that's what everybody says, but I'm not
It's true.
quite there. I'm not quite there. I really respect those of you that are super brave, like you, Steve. Do you wear contacts?
I used to when I was younger, so I played sports all the time, but not anymore.
That's when the chicks, when you wanted to get all the chicks.
No. There's no problem with glasses having to do with that as long as you're wearing nice glasses.
Yeah, that's true. Good point. But yeah, I have a really big problem with my eyes. Like as far as sensitivity, I can't stick anything in my eyes. 69.40. All right. Wait, what did I do there? That's wrong. Okay. 69.40. So there's just, I have to point out that the market is very, very slow moving. I was a little bummed out today. Dollar Canadian, we'll talk about the dollar Canadian. Got up towards resistance. Amanda sold some up here, and I'm like, I'm going to take a little bit of profits, and I did. Excuse me, really quick. And it came back down here, and I just added it back. Excuse me, but I am a little bummed out that we're just, it's like this market feels like it's never going to have any follow through. It just, just when you get excited, you're like, oh, look at this, we're starting to get excited. And then, whoop, thanks CPI. And again, I still don't understand why higher inflation didn't put. I know Steve tried to explain it, but I still don't understand why the dollar didn't pick up a little bit here. Anyway, resistance is going to be 126.50, as you guys know. It's still 126.50. Ooh, I got to get started. We're not turning bullish till we get above that. We're hitting the resistance zone, so now 126.30 is also important. Support. I mean, I hate to say it, but 125.35. I mean, that's the trend line. So again, it's like, so just when you think you're going to get a little bit of a move. 92.10, we're almost there, guys. So you got to watch the Swissy. I'm really nervous about the Swissy, and obviously the dollar yen as well, as I talked about during the F.A.C.E webinar. But yeah, you got to get a little concerned, especially if we get below this 91.90. That's a breakout point. Remember, oh, I'm sorry, it was the spike lows here. It's been pretty key level. So I'm going to write 91.90, 92.10. And you guys know that 92.10 is really important to me. It's a spike low right here. And then obviously we can't get our head back above previous support, current resistance will come in at 92.65. So, and I'm keeping us back in range as I did yesterday. Dollar yen, we're still bullish while above 109. But again, I'm going to point out we get it below 109 and things are going to get a little dicey for the dollar yen. That's really important support right now. It's bullish for now. Resistance for the dollar yen, spike low, spike high, 110. Okay. Dollar index. Okay, this channel obviously doesn't matter now because we rallied above it and back into it. So it's really the 618. But this is, let's do this. Okay. 38% retracement comes in at 91.85. And resistance right now, today's high, but also these last few days, their highs, they come in at 92.50. That's resistance right now. And I'm going to keep this range bound. Dollar Mex. Just when you thought the dollar Mex was going to make a move, it still could not get above 2026. So 19.99 still resistance. We're going to stay in a range. 19.99 is the 127% or no, I'm sorry, the 78% retracement. So I mean, we are supported right now at 2007, but I'm thinking that if this wedge is sticking, then we might make one more push lower, maybe. So resistance, yeah, 2026, support 19.99, but just note that 2005 is holding for now. I could write that down, I guess, but I'll run out of room. US dollar, Norwegian krona. Okay, we're holding above this broken trend line, which is good. But the fact that we just rallied and spiked up and came back down is frustrating. So I'm going to write down today's high at 856.70. I'll just write 856 as being resistance. I'm going to keep us in range. Andre posted something regarding the Norwegian krona harmonic that takes us up towards 860. Just check the chat room or his analysis on harmonics if you want further details. Support 847. By the time we get back down there, it's going to end up being this trend line. So I'll write that down.
I don't know. It looks to me that the dollar wants to break lower. Even if you look at the DXY, we are currently testing a nice confluence of supports at 92. The recent consolidation looks to me like a triangle or whatever. So, you know, I still think lower is the path of least resistance for the dollar.
Well, remember the 38% retracement, as I just pointed out, is right here. And that's at 91.85. That's the 38% retracement from the lows. So that's going to be, and I wouldn't be surprised if we break through the lows, test support, and then bounce, right? But yeah, it's heavy today following the CPI because it makes a lot of sense. S&P's 4,100. Resistance is the 161% extension at 4,150. So just remember, this is critical resistance for the S&P. 4,150. That is the 161% extension. Now, support, again, actually it's 4,110. Sorry.
So many potential terminal formations in the S&P, and none of them seems to work.
No, they just all resistance levels act like speed bumps.
Yeah.
Right? I mean, that's all it is. It's so crazy. Okay, gold and silver. So remove that. So silver, I'm going to just write, as you guys know that I've been writing this. I have nothing to say other than 2380 up here, 2680. That's it. I mean, it's just like there's nothing to do with silver. I know a lot of people are trying to buy dips, which is fine. I'm just saying that for me, it's range bound. And gold, the market, I believe, thinks that this double bottom is going to play out. So just, everybody's looking for this 1760 level to break. It's range bound for now, and support is 1722. So I'm just going to write that. And by the way, I mean, this could be
A pennant.
Yeah, it could be. And so, it looks bullish here. So, I mean, with what Steve just said, it's looking pretty bullish. Dollar's looking a little bearish. I mean, why can't gold, try to make a run for it, right? So we'll see. Bitcoin's bullish. We're above 62,000. Like I said yesterday, it looked like a wedge. Even on last night's analysis,
I think Bitcoin has a perfect formation.
bullish wedge. What's that?
You're looking at it as a bullish wedge. I'm looking at it as a bearish wedge.
Why? A bullish wedge is
I'll tell you why. Keep the trend line support as you have it.
I'll let you take over because I just need to finish up here. So, but when you have consistent highs, right, or close to consistent highs, and then higher lows, that's a bullish wedge.
Yeah, that in the short term is the case. I'm talking about the longer term formation.
Yeah. Okay. Well, I'll let you show everybody what you're talking about versus me making some adjustments here. Let me just go ahead and do this though really quick. So let's take this high to low. Let's see how far we can extend this rally. And I know you might be looking at this, Steve, something that looks like that.
Yes.
Which is fine.
Exactly.
But we have a long way to go before we even get there. So 65,200 is going to be the 127% extension, and you got to continue to stay bullish. But there's going to be dip buyers well above 61.5. So 61,000, 61,500. And next resistance is at 65,200. So 65,200, 127% extension. This is bullish. And I'm going to remember, I'm keeping gold on bearish while we're below 1760. We get above 1760 and then things change a little bit. All right. So Steve, I know you were looking at this as being a possible ascending wedge.
Yes.
Yeah, so
and if you look at it on the daily, a lot of RSI divergence as well. So Dale would call it a 3 drive.
Yeah, but at the same time, we just broke that divergence.
Oh yeah, absolutely. I think my target is at 67,000 and 67,500 is my target.
That definitely looks doable. All right. Well, and by the way, NASDAQ is ripping. The Dow is falling. Just, this is usually that happens when yields rally, or excuse me, when yields go down. So yields must be dropping here. Yep, yields dropping. Everybody's buying NASDAQ and selling some of the value stocks. So we're seeing the S&P and the Dow under pressure, and the NASDAQ's rounding to all-time highs. Interesting. All right. So here's your bias chart. Stelios, I don't know. Did you grab a picture?
Something is missing there, Blake.
What's
in gold.
that?
Something is missing in the bias chart.
No, just click escape. You had it all.
Oh yeah,
there.
yeah. Click escape.
Okay,
Yeah.
there it is.
I've already posted it, so don't worry.
Got it. Thank you very much. All right, guys. Well, hey, again, I'm gonna just I want to say that this talk of or let's go back to the conversation about inflation. I think inflation is gonna eventually, I can't see, like, why would how is it? Because I don't get it. How is it that the Fed how do they not see inflation? Like I said, they're obviously way smarter than me, and they still say inflation is transitory. How is that even possible?
Because they don't have the capacity to do something about it. So since they know they're not willing to do something about it, they will keep pretending that it's not an issue until they can't do otherwise. I mean, until they can't continue pretending that it's not an issue. So I think the gameplay here is going to be pretend that it's transitory and it's not an issue until it becomes apparent and accepted that it is.
And they act too late as always, right?
And then take it from there. Yes, exactly. Because don't forget that the Fed is also political in many ways. Not only that in the sense that they're not independent. Of course, we've seen that in 100 different ways during the past few years, but also in the fact that each Fed chairman wishes to have as good as a tenure as possible and get out of the job without being blamed for too much. So, I mean, each Fed chairman has the incentive of also pushing the dirt under the carpet and pretending that everything is okay and hoping that that can remain the case until somebody else takes over.
Yeah, and I guess the one thing that I have to always remind myself regarding the Fed, one of their key tools always are their rhetoric. That's what they rely on.
Exactly. Imagine if the Fed accepted that there might be a problem with inflation.
You know what? You guys are so screwed, especially you guys on the lower end of the food chain, because prices are going higher, and oh my God, you guys are really, really screwed. Then what would happen? You take the majority of the populace and says, oh crap, prices are going higher. I gotta start saving my money, and then now you have 90% of the population not spending money, and then you got a bigger problem, right? So,
yeah. Although expectations of high inflation creates the opposite: spending money instead of saving it, because you don't want to save money that loses value.
Well,
you'd rather do other things with them.
I mean, yeah. Well, that's the thing, is that buy other things. Like, so you stop. You buy. You might buy, your food items or stuff, but then you're going to put off buying a new washing machine or
expectations of inflation. What they usually do is that they increase willingness to borrow, because of course that you're going to have to repay less than you borrow, right?
Yeah.
And they decrease incentive to save, because why would you want to save money that loses their value by saving them?
Yeah, right. Well, hey, anyway, Steve, I'm going to take over, or I'm going to let you guys take over. And for those of you guys listening in, thank you so much for your support as always. I was going to also mention something else, and I can't even remember what I was going to say. I don't know. But Steve, I'll let you take over. I'll see you guys during the daily roundup in a few hours.
Bye-bye, mate.
Thank you, Blake. Thank you.
Thanks, guys.
Okay. So a couple of things to mention. We did get some data today this morning. We didn't have the time to cover it on Face. UK GDP was slightly worse than expected, but in industrial production, manufacturing production was better than expected. So like kind of a flat on that. But the main news for the UK was Andy Haldane leaving, the chief economist of the Bank of England leaving, basically. I haven't read who might be replacing, but well, we're going to get a chance to see that. US CPI we saw beat a little bit, and year on year 2.6%. It's starting to climb a little bit, and
Imagine what the real number is.
oh yeah. And you talked about Bitcoin, and everybody who follows us knows I'm a little bit of a skeptic, but I obviously look at both sides of the coin. Have a friend who's been long Bitcoin and Ripple as well. And Ripple, a couple of days ago, they settled the thing they had with the SEC, and it's just blowing out now. And the guy's making a lot of money. And I said to him this morning, I said, he's still hanging on. And I said, look, it's a great gamble. Well done. He goes, yeah, it was a great gamble. And as long as you understand what you're doing,
Time to
I
take
think,
some profits, dude.
yeah, he's taking some profits now. But as long as you understand what you're doing. And one of my friends who I know personally and who I follow on Twitter, he wrote this today that there's he's reading a lot of crypto fans saying that they think that digitizing currency is going to bring liberation from centralized control. And he
Good
says
luck.
it's actually going to do the opposite thing.
Of course.
If you digitize a currency, you have no actual physical cash taking place, then the government knows exactly what you're doing.
And every
every
transaction,
time.
yeah, exactly.
And there are people who are replying, no, you don't know what you're talking about, and this and that. And I'm like, well, yeah, I don't get it. But anyway, bottom line is cryptos are going higher and higher and higher. End of story. And if you've been in it, well done, nice gamble, and manage your risk now. So
yeah, I think it's time to start being a little bit careful here, because both Ethereum and Bitcoin have now met my minimum objectives. But yeah, I do think there is, some room for, extending a little bit further, but I would be very, very careful from there. I think, some big pullback is due following that.
Yeah, I mean, at some point this should be, but you've seen how it's been trading. It's gone basically from Bitcoin from 10,000 to 60,000 in a straight line.
Yeah, why not?
Amazing.
I mean, yeah, absolutely.
What else? We have in about 12 hours or whatever it is, we have the RBNZ interest rate decision, not expected to change from 0.25%.
Let's see, because the Kiwi looks worse than anything else for the time being.
Yes.
From the commodity currencies, is by far the worst performing lately.
So they might give us something, some kind of indication or forward guidance or something. But really, that's the main news coming up. And what else? We had obviously the news for the Johnson & Johnson vaccine, which I personally don't get. You had apparently 6 cases of blood clot in 7 million doses.
Oh my God.
So 1 per million. I bet you if you look up polio vaccine, 1 per million, that's going to
It's not only that. Sorry, I don't understand something. Isn't 1 out of 1 million people getting a clot irrespective of vaccine anyhow? I got one 2 months ago.
Yeah, exactly.
Without being vaccinated from anything. So, I mean, how exactly can you connect the two of them? I don't get it. I mean, if the number is so extremely low, how can you even connect the two? I mean,
statistically,
I bet more than that people get dead from a car accident following the vaccine.
Yeah, true. Statistically,
so are we going
to
attribute the
statistically it's a zero number, that kind of number. So I don't get why they're making such a big fuss. Even the other one, the Zeneca one, which was 1 in 500,000, that's still statistically almost zero. So anyway, I guess they know better than we do, probably.
Anyhow,
yeah.
Yeah.
So what can we have a look at that we haven't had a look at with Blake?
Yeah, Blake covered a lot of stuff. Let me bring the 4-hour charts as well. Now, having to do with the DXY, this is what is it? Here it is. Here's what I was mentioning. Looks to me like this was a bearish consolidation here, and we seem to be breaking down from it. So, I have no reason, even in the weekend analysis, if you read it, guys and gals, my main point of view remained to be bearish the dollar against more or less everything, with the exception of the Kiwi, until proven otherwise, because simply it's what we've said again and again and again. I mean, stocks remain bid. The dollar's overall trend is lower, and as long as stocks remain bid, there is no real fighting chance from the dollar. I mean, the best it can hope to do is not lose any more ground and consolidate around these levels. But inevitably, I think it's going to resume lower. Only risk off can save the dollar from further depreciation. Although in general, this type of formation looks very corrective to me. So I think absent risk off, inevitably it's going to end up breaking down and continuing to the downside. Now the euro is still, creeping higher towards resistance. The cable is also creeping higher towards resistance. The Aussie is doing the same. Here it is. Other currencies like, let's say, USD CAD, here it is, got rejected once again from that level. And this channel trend line resistance, this horizontal support resistance area as well. Here's the USD NOK still consolidating in a triangle. The more time we spend here without breaking higher, the higher the likelihood that we just end up breaking lower. Keep that in mind. I mean, it's as simple as that, because the bulls have made several attempts and they seem to be failing. At some point they're gonna surrender, and we're gonna get more weakness from the bear. So as long as we trade below 865, 868, I really find no reason why somebody should be long the USD NOK. Only above it we can open the door for a bigger type of rebound. Until that happens, I find no reason to be on the other side. Now, there is a bullish case scenario here with silver, and it has to do with this descending triangle. But needless to say, silver is a very tough technical pair to decipher since we found that high. I mean, I know this is some kind of a corrective formation. It's just too complex to be sure if it's over, if we have more downside or whatever. So I can't say that I would be willing to to take the risk of saying, yeah, we found a low, that was the low, or that was the low, whatever. I just know that medium to long term we're headed higher. Now, gold is an easier formation to decipher, right? Because we have this big channel. We now have, within the context of the channel, a rectangle. You can see it here. Resistance is, let's say, roughly 1755. Support is clearly 1677. So below 1677 we should have more weakness towards like 1580. Above it we should open the door for another attack of the channel's resistance, right? The GDX seems to be leading somewhat. You see the difference. You see that we have somewhat of a distance from the channel in gold, but the GDX seems to be more optimistic about what's about to happen here. So both of them look to me like they're eventually headed much higher. And fundamentally speaking, explained multiple times the whys. Now, oppositely from gold and silver, I would remain more cautious in the case of crude oil, because there is the bullish case scenario that this is a consolidation, this one that you see here, right? In which case, if we take the bigger one as the whole formation, this is a bullish triangle, right? That should break to the upside. But there is also the other interpretation, which I don't know, for some reason I find somewhat more likely that this is the triangle, in which case we should get one more low before higher. But both are valid interpretations for the time being. So it's not easy to say if this is the correct one, in which case we should be headed higher without seeing a lower low, or the other one, in which case we should see one lower low before we're headed higher. So that makes me more cautious crude oil in the short term, because my long-term thesis hasn't changed here either. I think crude oil is also sooner rather than later headed higher to new multi-year highs. What else? Let me go through some of your questions. Can we have a look at Tesla? Yeah, absolutely. Haven't done that in quite some time, actually. So here is Tesla. Yeah, last time we had a look at it, we were talking about the possibility of some type of a triangle. Of course, we didn't even have 2 points. So it was much earlier, obviously. Neither we could be sure about resistance. So, same applies here. I mean, we don't have enough price action to be certain about the formation. Have we broken out or whatever? I think that below that area, there is a good case to be made that we should get at least one more low, right? So I think like below 775, we can see another bearish leg lower. Above it, we're probably headed to new highs. That's what I think about Tesla. PL, PA, SI, PL, PA, SI. What are those, mate? PL. Is this the one? Is this the one you're asking for? Pinnacle Renewable Energy or not? So platinum, you mean? Okay, so okay, so yeah, platinum. Here it is. Now, I plotted the two cases here for platinum, right? Case number one, the one we've been discussing, above this channel, we can see higher prices, meaning if we hold this low, we can go straight higher. Case number two, one leg lower, consolidation, one more leg lower, then higher. That's what I think. So 1170 is like a pivot area, more or less. Against it, you can be bullish. If we break down from it, I think we should see one more leg lower towards, I would say, like 1040, perhaps even 1000, round number, and then higher. In any case, I think we're headed higher. And having to do with palladium, palladium looks very, very, very well bid, right? We've broken through the long-term triangle. We formed a flag. We broke above it. I think we should be retesting the all-time highs sooner rather than later. Hi guys, wonder why copper is lagging when gold and silver are pushing up. Because copper is not like that much correlated with the two of them. I mean, yes, of course, there is a correlation since, first of all, both of them are, all of them are denominated in dollar terms, right? Having said that, there are instances that copper is doing bad and gold is doing great, or the opposite. So there are instances when you can see them actually move in opposite directions. Let's say you get some type of an event that creates jitters about the financial health of the system. That should immediately get gold to spike higher and copper to sell off. Just an example. Okay. Having said all that, it is very likely that we're seeing a symmetrical triangle forming here in copper, and that would imply an eventual break higher as a more likely scenario than anything else. So, yeah, I think that copper looks well bid and it should remain so. Guild. Didn't we have this? Is this the one? Is this the one? Yeah, we had a look at it the other day, and as you see, nothing has changed here. If that's the one we're talking about. So yeah, I don't think anything has changed. I think it's likely that we get at least one more leg higher before lower. And of course, depends on the leg higher. We might even need to reassess if it's going lower afterwards or whatever. But it looks to me like it has more upside after we're done with this type of consolidation that we're seeing as we speak. Let me see. CHF, MXN, USD, CHF. Okay, yes, sure. USD, CHF. First of all, here it is. Listen, we got that one last high above this flag, and now we've completely retraced the last leg higher. That's not a very bullish development, right? So I think it's vulnerable as we speak. So use the Swiss testing the previous low. I think it's vulnerable at the moment. So I would be, very careful being long here. Very, very, very careful. I have no reason to believe that this move lower, even if it's corrective, it's over. I mean, best case scenario, I would assume. I mean, the bullish case scenario, I would assume, would be something like that. That's the bullish case scenario. But I don't think it's over pulling back, although there is a chance that it's completely over rebounding high, right? So be careful with that. Yeah, I would be extremely careful with it. Keep in mind also that Euro Swiss ended up breaking lower from this triangle, which also isn't helping. Same for MXN. Listen, the USD Mxn, let me pull it up. So I'll show it to you. There it is. So the USD Mxn, here it is. It has already retraced like 78.6% of this rebound higher. And yeah, there is a chance that that was it. I mean, that was the rebound. I wouldn't rule out seeing new lows. I wouldn't. We got rejected again from that trend line resistance. That was like what, the fourth time or whatever. So yeah, I would be very, very careful. Now, as I said before, in general with the dollar, I think the only thing that can save the USD Mxn from actually ending up producing lower lows is risk off. Absent of risk off, I think it's a matter of time to see the USD Mxn below the 1955 low that we got in January. That's what I believe about it. Euro Ruble, IBB, Euro Ruble. Okay, so let's start by having a look at the ruble against the dollar, and here it is. So, first of all, it remains within a broad consolidation, right? The bullish case scenario is that this huge formation is a big cup and handle formation, right? Now, of course, it's extending further, so it's like this one. Okay, so this one, that's the bullish case scenario. Now, looking shorter term, somebody can make the case that this is a triangle, right? If you draw the trend line there and there. But no matter how you look at it, it's very choppy. I mean, we've been coiling within the range this pullback created. So then we had a rebound that didn't fully retrace. Then we had a pullback that didn't fully retrace. Now we might be about to fail from this expanding triangle trend line resistance. So in general, I think the USD ruble has no direction, has had no direction, during the past several months. Now against the euro, as you see, this looks much cleaner, right? So, just by looking the equivalent formations, I would have to say that being long the euro against the ruble, if you want to be short the ruble, makes technically a lot more sense than being long the dollar. This formation, cannot be read as an impulsive formation. This looks like a, very corrective type of a pullback that has ended up retracing a small portion of the previous impulsive move higher. So I would have to say that euro ruble looks a lot better and a lot cleaner with, a much better chance of pushing higher, shorter term than USD ruble. If we expect oil to keep going up, maybe the ruble will catch a bit. What do you think? Yeah, I've explained before that in general, I think that the ruble, longer term speaking, fundamentally is a very solid currency because the Russian economy is, fundamentally speaking, is holding up very nicely. They have low debt. They have a lot of
Resources.
Exactly. Demographically speaking, they're also well, oppositely from the vast majority of developed countries. So yeah, I think I think long term the ruble should do very, very well. Now in the shorter term, it doesn't look like it's ready. You know what I mean? It doesn't look like it's ready to accelerate higher. But that's only the short-term picture, nothing else. Somebody was asking for natural gas. Listen, natural gas found support again at this 50% fib, and it seems to be catching a nice bid. Above 267, we trigger a double bottom. So you see natural gas above 267, we trigger a double bottom that would point to this resistance over there, 280, close to 290. So yeah, that's what I think about it. My pleasure. US 10-year yields. Listen, in the short term, the 10-year yields look toppish to me. In the short term, I had this ascending wedge for quite some time on my charts. And we seem to have broken down below it. So I think in the short term, it looks like we might have a deeper pullback here in 10-year yields. But the question is, what extent? I mean, how far can we pull back? I would have to say that going below 150 is not going to be that easy. With the current environment. So likely further pullback, but will it be very deep? I doubt it. Of course, in this case as well, seeing some risk off should help yields push lower, because absent of risk off, especially absent of risk off, I don't think yields can pull back much. I think any pullback is going to be very shallow. Now we see a big risk of moving the market. They should catch a bid temporarily. So temporarily they should see a bigger pullback. Let me see. Silver miners listen, the silver miners look exactly like the gold miners. I mean, exactly like silver. So, you see GDX, GDXJ, and the silver miners, they're like copy paste the equivalent formations of the metals. Keep in mind that investing in the miners is more of a doing the same thing. The only difference is that it's higher beta. So it's like, let's say, a more leveraged trade you can take, oppositely from like buying the metal, right? So that's the only difference. So you can refer to buying the miners if you want to have exposure to these metals, but in a more speculative way than just buying the metal and holding to it. The most conservative and safe way to do it, though, as I've said, is actually buying the physical stuff and holding on to it. I'm pretty sure you'll never regret it. IBB and WFC. Let's see what.
Steve, I have to run. So when you're done, just
okay, bro.
Wrap up. Okay, thank you.
Thank you.
Bye, everybody.
Bye, mate. IBB, I think wants to go lower. You see why? That's why. So I think at least one more leg lower. And WFC, this looks very well bid. Yeah, some divergences, but as long as we trade above this trend line, I think it can push even further to the upside, right? Quite an impulsive move higher. So I wouldn't be betting against it. The other one looked better as a short. This one looks better as a long. Okay, I think that's it for today. Thank you, guys, girls, gals. See you tomorrow again. IWM. Yeah, nothing has changed with the Russell, I can tell you that much. Here it is. Not sure what it's doing at the moment. This is a larger consolidation for sure. I mean, it clearly still underperforms the Nasdaq, the S&P, so on and so forth. So, relatively speaking, we see weakness here, meaning, if you want to be short, IWM looks like a better proposition. If you want to be long, why would you be long the IWM? It clearly lags. Now, in isolation, it's currently in the middle of this consolidation. So, yeah, the trend is higher. So, chances of a resolution to the upside are higher, of course, than the opposite. But as I said before, if you want to be bullish, why be bullish the index that shows a relative weakness and not one of the others that shows a relative strength? You know what I mean? So in any case, I don't think you should be shorting it because we don't have like a technical breakdown yet. On the other hand, why would you want to be bullish this one instead of the other indices? So bottom line, I wouldn't be doing anything with it where we are. Okay, have a wonderful rest of the day. Bye-bye.